Can I ask you a question? Do you know all the ins and outs of the housing allowance for pastors? If not, don't worry. You're not alone. Many people don't fully understand this tax benefit for ministers and clergy, but for those who do, it can make an enormous difference financially. The Ministers Compensation and Housing Allowance, as the IRS calls it, is referred to as the parsonage allowance or rental allowance. Whether you're a pastor or a minister that qualifies for the benefit, or you work in the realm of church finance and human resources, it is essential to know how this policy affects full-time pastors and clergy. Before I go any further though, I want to encourage you to consult a professional accountant or a lawyer for questions related to your personal situation. You want to be sure to verify all these details of the tax law in your state as well. So let's dive into the details. Let's lay out the definition of the housing allowance and clarify who can take advantage of it. According to the Internal Revenue Code, IRC Section 107, a minister may be provided with a parsonage or paid housing allowance as part of their salary compensation and exclude the value from their reported taxable income. Pastors can use this housing allowance to rent or purchase a home and pay for utilities, furnishings, and necessary maintenance and repairs. Note that you can exclude the allowance from gross income for federal income tax purposes, but not for self-employment tax purposes. According to Christianity Today, about 81% of full-time senior pastors take advantage of the housing allowance. This is saving pastors a total of $800 million a year. For example, suppose a minister has an annual salary of $50,000, but their total housing allowance is $25,000. This would be taxed on salary minus living expenses, which is now $25,000, half the original salary amount. Instead of owing taxes of $6,000, which is a 12% tax rate, which is somewhat common on $50,000, the minister would only owe $3,000, a 12% tax rate on $25,000. The tax savings would add up to $3,000 in this scenario, which is a significant tax break for many families. Another question you may be asking is, who can take advantage of the housing allowance for pastors? The housing allowance is available to ordained, licensed, or commissioned ministers. Workers in this category can include missionaries, evangelists, Christian counselors, youth pastors, music ministers, or any minister who performs religious worship or service as their primary job function. However, this does not apply to everyone who works in a church or a ministry. For example, administrative staff, or maintenance workers, or other support staff are not considered ministers for the purpose of this exemption. To qualify for the housing allowance, a person must meet the following criteria. Number 1, be ordained, licensed, or a commissioned minister of the gospel. Number 2, serve as a primary religious leader of the congregation as designated by the church and/or denomination. Number 3, spend the majority of their working hours in religious activities and functions or performing ministerial services. And number 4, receive a salary or housing allowance from the church as part of their compensation. If you're a pastor or a minister that meets these criteria, you are eligible to claim the housing allowance. Now let's take a step back and look at how to calculate and claim the housing allowance on your taxes. So the first question you may be asking is, who determines the housing allowance? Depending on your church, it may be a board, a council, or a denominational authority. The housing allowance should be set up in advance before the beginning of the tax year or when the pastor is hired. Although the housing allowance resolution can be adopted or amended at any time, this is important. It can only be applied prospectively, not retroactively. If you're a pastor going through the hiring process, or the housing allowance may be part of your total compensation package. It's one type of benefit along with cash and salary and benefits and paid leave and other reimbursements. Your housing allowance may be negotiable, but you should have that conversation with your church and the leaders before accepting the position. So maybe you're asking, how do I calculate the housing allowance? The housing allowance is limited to the fair rental value of your home, but other limits do exist. The total amount cannot be more than the reasonable salary for your position as determined by the church. The definition of fair rental value is the amount you could reasonably expect to receive from renting your home on the open market. You can look at local real estate prices or consult a realtor and determine accurate pricing based on comparable listings in your community. So even if your expenses are more significant than your allotted housing allowance due to your mortgage and home operations, the amount you can claim on your housing allowance exclusion, it cannot exceed the fair rental value of your home. For example, if your housing allowance is $24,000 per year and the fair rental value of your home is $22,000 per year, you can only exclude $22,000 of your gross income. In addition, suppose $20,000 of your salary is designated as housing allowance, but the actual expenses of your home are only $18,000, you're required to include that extra $2,000 on your gross taxable income. Any unused portion of your housing allowance will become part of your total income, and that of course is subject to normal taxes. Or maybe you're a pastor living in a furnished parsonage. It's provided by your church. Well, here's the good news. You can still claim a housing allowance for other home costs, and these include things like home maintenance, repairs, utilities, and furnishings. What expenses can I include in the housing allowance? You're able to include home operations expenses in your housing allowance in addition to basic mortgage and rent. These housing operations expenses can include utilities like electric, water, sewer, trash, gas. It can also include homeowners insurance, real estate taxes, home repairs and remodeling, furnishings, and appliances in your home, including repairs for those appliances. It can include pest control, lawn care, snow removal services, homeowners or renters association dues, but you're not able to include the following expenses in your housing allowance: food and other groceries, clothing, cleaning or domestic help, auto expenses like gas, car payments, insurance, entertainment such as Netflix or your HBO Max subscription. You do need to remember a couple of things when it comes to these expenses. First, you'll need to keep accurate records and receipts for all of these expenses that you're looking to include. Secondly, you can only designate expenses you incur within the designated year. You should consult a tax advisor before filing your taxes if you have any questions about what you can or cannot exclude in the housing allowance. So maybe you're asking, what steps do I need to take to maintain proper legal records and prepare for tax season? All agreements should be in writing. The pastor and church should maintain signed copies of the housing allowance resolutions and any amendments that are on file. It's important that there is a clear paper trail indicating that the funds have been set aside expressly for housing expenses. And next, you want to make sure you save all your receipts related to your housing expenses throughout the whole year. These include mortgage statements, rental agreements, property tax bills, and insurance premiums. It's also a good idea to keep a monthly record of your housing expenses. This can be a simple Excel sheet that includes date, type of expense, and the amount spent on each item each month. By taking these steps throughout the year, you can be confident that you have everything accounted for and in place when it comes time to file your taxes. While the housing allowance provides an exclusion from gross income, there are still some essential details that you need to know come tax time. The housing allowance excludes a portion of the income from federal taxes, but it does not exclude it from the SECA or SECA taxes, the Self-Employment Contributions Act taxes. So this means that you will still have to pay Social Security and Medicare taxes on the housing allowance. In addition, if you live in a state with income tax, you'll still be required to pay state taxes on the housing allowance. Here's how the IRS puts it. For services in the exercise of the ministry, members of the clergy receive a Form W-2, but do not have Social Security or Medicare taxes withheld. They must pay Social Security and Medicare by filing a Schedule SE, Form 1040, or self-employment tax. If you receive your housing allowance payments in advance, you'll need to include those amounts in your gross income for the year in which you receive them. On the other hand, if you accept your housing allowance payments after the end of the year they were earned, you'll need to include those amounts in your gross income for the following year. Finally, if you receive your housing allowance payments that exceed your annual housing expenses, you'll need to include the excess amount in your gross income. I hope this video has helped you better understand the intricacies of the pastor's housing allowance. The housing allowance for pastors is a great benefit, and it allows pastors to save money on their taxes. If this video has been helpful to you, it would mean a lot to me if you would like and subscribe. We release new videos at Reach Right here every week, and they're dedicated to helping churches just like yours reach more people and grow.